So I'm here with Cody Gladney with Goosehead Insurance. He is my preferred insurance agent. I trust him with my own insurance. He has been getting insurance and shopping around all the time. We have our insurance with him for years now, and I can't find a better guy to my clients and my people that I want to trust. So for me, having a preferred vendor, honestly, it's like a lot of trust and making sure that I feel comfortable myself and my own family before I send it to anybody else. So thank you for that. I appreciate you.
Well, thank you for your trust in me. I appreciate it.
Thank you. So tell me, how long have you been in business?
I've been in insurance since December of 2008, so about a little over 15 years now.
That's amazing. That's good. Okay. So, Cody, I came up with a whole bunch of questions that I wanted to ask you that I think my buyers, my sellers, any of the clients that we have would love to know about it. So, you can educate us on insurance.
I'll do my best.
Thank you. So, the first question was about coverage options. What type of coverage do you offer, and what insurance companies do you work with?
So we work with a total of about 20 to 30 different insurance companies, some big ones that you've heard of, some that you may not have heard of. It all kind of varies on the exact risk or location of the property. As far as different types of coverage, we offer coverage for people that are buying homes or homeowners. We offer renters policies. We offer policies for those people who have rental properties or vacation homes.
Okay.
We even offer coverage for people that are flipping homes, right? That may be doing some construction and selling of those homes.
Awesome. So I was very fascinated by the fact that you said there is an insurance score, and it's the same coverage might be different for me versus John Smith, right?
Correct.
So can you tell us something?
Yeah, correct. So everybody has what's called an insurance score. It's very closely related to a credit score. In fact, credit is probably one of the factors in there.
Okay.
It's not necessarily a hard pull on credit, and it doesn't give, I can't tell you if you have a 750 or an 800 credit score, but you will certainly see it influence your rate. So you're exactly right. The same property for two different people is going to cost different. And a lot of that is based on credit.
Does the income work anything in there? Does it matter how much is my income?
Income's really not important. It's more credit/insurance score.
Okay. Which I assume that income indirectly affects your score. If you're not
probably right. It does seem like those people who are able to pay the bills on time, right, will have better credit score and thus insurance score. I think that's a fair thing to say.
Okay. So policy limits and deductibles. What are the policy limits for standard coverage then?
So typically with a basic homeowner's policy, you're going to have coverage for the dwelling or the structure. Also for other structures, which would be things like any outbuildings you may have, typically an attached fence to the property. You're going to have coverage for your personal property or all your things inside. You're going to have coverage for what they call, this is on a typical homeowner's policy, like somebody who's using this as a primary dwelling, is going to have what's called loss of use, like if you have a fire in the kitchen and you can't live there while they're repairing it. Another part's called personal liability. Like somebody comes over, trips, falls, hurts themselves, and then a part called guest medical payments, and that's fairly similar to liability. Like someone comes over, trips, hurts themselves, maybe not going to sue you, but needs some sort of payment for a broken arm or something like that.
Okay. Do we have a coverage if they decide to sue us?
That's right. So that's typically under the personal liability.
But I'll remember not to invite them anymore.
That's right.
Safety hazard. So how about a deductible? How do we determine what deductible is good? Does that matter? And how does a deductible works?
Yeah, deductible certainly matters. So there are typically two, sometimes three. They kind of separate in coastal areas, but you have a wind and hail deductible. And that sometimes is thrown together with hurricane, but sometimes it's separate, depending on where you live. And then you have a deductible for all other perils. So that would be everything that's not wind and hail related. So, vandalism, water damage, all these other things. Deductibles are important because that's when claim time comes, it's basically the amount out of pocket you're going to be. So, for instance, most people have percentage deductibles, and that percentage is based off of the coverage for the dwelling. So if we have your house insured at $500,000 and you have a 1% deductible, that's a $5,000 deductible. So come claim time, you have a $50,000 claim. The insurance company is going to look at that and say, okay, we're going to pay $50,000 minus your deductible of $5,000. So here's a total of $45,000 for you, right? Okay. So it is important to kind of pay attention to that. It is also a premium, it affects premium cost, right? So the higher deductible that you have, let's say it's 2% or 3%, the lower your premium is going to be. But you have to remember that it's going to be more money out of pocket to come claim time, and vice versa. A lot of times you can lower the deductible, but it's going to raise your premium, right? But you're out less during a claim.
That makes sense. So
now, most contractors should be actually having you pay your deductible.
Okay, so the deductible has to be, it's same thing with the cars, right?
That's right. It works very similar to a car, right? When you got full coverage on a car and you have, let's say you have comprehensive coverage and you have a hail claim, and you got a $500 deductible, $3,000 worth of hail damage, insurance company's going to pay $2,500. Very similar.
Perfect. So you went over the claim process a little bit on how we can, you kind of walk through us how the claim process works, right? And how quickly typically they process and settle the claims?
Well, it varies on the claim, right? Obviously, the higher severity of the claim, it can take a while, right? Sometimes if you have a big water damage claim, obviously there's a lot of moving parts with that, right? Such as people have to come dry it out or restore it, then there's a process of rebuilding the house, right? Repainting, putting new drywall in, all those type of things. So obviously it depends on the severity a little bit. As far as claims process, typically the best process that I would suggest to someone, and this is just my personal opinion, is to call your agent first and kind of discuss the claim. And it's not necessarily that I'm going to tell them, hey, don't file this claim, but I am going to be a helpful resource for you if I can just automatically tell you, number one, hey, that's just something that's not covered, right? But also I'm going to help you through it with, okay, these are kind of the steps, this is kind of what to expect. That's typically what I would suggest with your agent. But if you don't want to deal with your agent for whatever reason, typically each insurance company has a claims phone number. It's like a 1-800 number. It's a claims reporting line. You call that number, you just kind of tell them what happened or when it happened, the who, what, where, when, and why. And then they will typically assign an adjuster to you within 24 to 48 hours who will call you and go more thoroughly through what's going on. And they'll help guide you through the rest of the process.
I know I learned that personally after we had to renew that I should have had him on a speed dial. We just don't want to. We love calling you. You know that. I do that all the time. But we just didn't want to bother you. And my husband filed a claim, which it affects our insurance a lot more, and it was a very small claim, right?
That's right. So
if I had brainstormed with Cody, I might have decided otherwise or reconsider filing it or not.
That's right.
But some of the small claims are.
Yeah, just because you have a deductible, right, doesn't mean that you have to use insurance for anything over the top of it, right? I would highly suggest rethinking it if you, for instance, have $550 worth of damage and it's a $500 deductible. It's generally not a good idea to file the insurance claim for that $50. Not because that they won't pay it, they will. But it's going to affect your rate when you
Your
come
rate
back
by a
up.
lot because it's just a point on your credit.
That's right. Well, yeah, it shows number one, it's a claim frequency issue. Number two, it may affect a discount, right? You might be getting a claim-free discount, and generally those are pretty large. Well, even though you only had a $50 claim, it's going to affect that.
That's a good point. So
I love talking about insurance.
Okay, so we're back. so our other question was, I know there's some exclusion in homeowner insurance. What are some common exclusion in the standard home insurance policies?
Good question. Most common exclusions are things like volcano, which usually not an issue.
Katie was asking about it. So you know where we have
had some issues, right? Typically, earth movement is a big exclusion.
Is that in Texas?
That is in Texas, so you got to be very careful with that. No insurance company is going to cover, like, if you have to put foundation piers under your home. Unfortunately, that's just going to be something out of pocket, right? If they have foundation correction.
So foundation coverage, it's not.
That's right. So yeah, we'll get to that in one of your other questions here. But yeah, typically just for the foundation piers. Now you can add an endorsement. We'll talk about later, but for like the damage to pipes under the foundation sometimes. Anything that you're intentionally doing, right? If you're intentionally taking a baseball bat to your house, that's going to be something they're going to exclude for you, right? Nuclear war is one. Rust and many types of mold are often excluded. Sometimes they'll give you a limited amount for what's called mold remediation, which is like the testing that they do. But most companies very, very highly limit that.
That's interesting. So mold is excluded. So if you have a water damage and mold is caused by that water damages. That's
a little different. So if it was caused by the leaking appliance, for instance, whatever.
Not a negligence.
That's right. Not a negligence type issue. Then yes, then that's going to be covered.
Oh, okay.
But yeah, we're talking more like the black mold type stuff.
In the showers.
Right.
Okay, we're rehabbing the house and we saw the mold, and I can't call you and cover it.
Unfortunately, typically not.
Okay.
Or it's very limited, right? Okay. Very, very limited.
That's interesting. I didn't even think that would be covered at all. So that's good to know. So, and how can client assure they have a coverage for specific items or events?
Yeah, so I think that's a good question. So there are policies that can be written for special events, right? Let's say a wedding or a bar mitzvah. Check with your agent. They have different ways of covering those specific events.
If they're having it at their house, you mean?
Yeah, it could be a house, or maybe even if you're having a wedding at a venue here.
Oh, okay.
Right? A lot of times those places will ask you to have some sort of event insurance, and a lot of agents can handle that for you.
Do you do that?
I do.
Oh,
yeah,
okay.
We do some of those type events.
That's good to know.
Specific items, if you have any really high value items, so it's jewelry, artwork, any of those type of things, even can be sports equipment, those type of things. The best idea is to get with your agent on those and attempt to talk about scheduling those items. Okay. And when you schedule an item, you usually do so with an appraisal, right, that you would get from, let's say, a jeweler. And it covers that item for pretty much everything you can think of, including if you just lose it. So it's a better way to insure those items than just a basic homeowner's policy.
I know, I learned that late too.
Oh no.
Remember I asked you about, I lost a diamond.
Yeah, that's not good. That's not a good feeling. Not a good feeling.
So, what if it's not, what if you're not home and you lose it?
Yeah, so if you have that scheduled type of policy, right? And they call it a personal article floater or inland marine for different things. It follows that item pretty much wherever you are.
And is that true that you should be using it, or is it if it's sitting in a safe and something happens,
Well, I guess that's, if it's in the safe, that's kind of between maybe you and the bank, or if you trust the safe, right?
At home. Let's say you're not using it, you're just having it in a drawer, and you come pick up my watch, and all of a sudden it shatters, or I hit it and it shatters.
Yeah.
If I have the coverage.
Sometimes breakage, it depends on how it broke, right? But yes, if you just hit it somehow and broke it, if you have that coverage, then yes, it's going to pay.
Okay.
Unfortunately, even if if you're just hey, I have this in a safe, I'm never going to wear it, right? But then you take it out that one time to wear it and it breaks, your homeowner's policy is not going to cover that, right? That's why you need a inland marine or a personal article floater on.
I could be very far from the truth, but I feel like with the insurance going up, with they're trying to not to do a lot of coverage, especially specifically to the roof that we have talked about, and maybe we can talk about that a little bit later with the cost. Let me ask you later.
Okay.
Rebuilding costs.
Okay.
We'll do that. Okay, so I want water. Okay, so rebuilding costs. How do you determine the cost of rebuilding a house in case if it gets burned down or you get a total loss?
Good question. So typically every insurance company has what they call a replacement cost estimator built in within their system. And that's where it gets things about your house characteristics: square footage, how many stories, is it brick, how many bathrooms do you have, all these type of things. And where it's built, when it's built, all those type of things are important in figuring out what they think the reconstruction cost of that house is. So we typically plug those items into the calculator and it spits out a value. It's not always going to be the same as like what it appraises for or what it's on the market for. Those are typically like market value things, right? Okay. The other thing that it doesn't take into account is your lot. So hypothetically, you buy a property, right? And it's got a house and it's built on some land. Maybe it's a lot of land, maybe it's not very much, right?
Right.
But it should be the same to build that same structure, no matter what land we're building it on, right? So a lot of times that also influences the market value and those type of things when you buy a property, right?
Right.
But not necessarily on the insurance side.
Okay, that's it. So is there an additional coverage available for rebuild or with the upgrades? Like let's say I put in marble floorings and very expensive upgrades in the house.
Once you do that, it's a good idea to get with your agent, right? And let him know that you've done those things. Hey, I put in a marble countertop and those type of things. Because ultimately we want to refresh or get a new replacement cost estimate to take care of those items, right? We don't want to leave you uninsured when we think maybe you have a particle board countertop and you actually have a marble one.
Is that what they calculate usually?
Oh, builder's grade, right?
Builder's grade, yes.
Builder's grade.
That's pretty much it. Right. Okay, so they don't go based on like how we do a property value like we do. We look at how the appraisal looks at what's selling in the neighborhood. So you guys go based on what you have in the system, basically.
That's
if
right.
I have a better house in the neighborhood, I need to make sure I have a higher coverage.
That's right. Yeah, that's exactly right. You want to discuss that with your agent and say, hey, I know that my next door neighbor's house and mine are the same, but we have upgraded to marble countertops, or we've done this, and this. Those are important factors, and you want to have that insured properly, right?
I built it with the John Doe, and I had to put 150.
That's right.
Upgrades in there.
Well, I mean,
I had to pay for it.
That's one of the things you want to make sure is insured properly, right? Because if worst case scenario happens and the house burns to the ground, the job of the insurance company is try to rebuild that house the same way it was. Right. But if they don't know about some of those things, it's going to be hard for them to do that.
And that would affect the premium.
Well, of course, yeah, that's right. That's right. Because probably in that situation, you're adding coverage, right? So obviously, instead of insuring it for $200,000, we did hypothetically, right, $25,000 worth of upgrades. We did insure for like $225,000, right? So yeah, it's going to affect your premium as well.
So the next question is personal liabilities. What level of personal liability coverage do you recommend?
Usually as high as you can possibly get, right? Okay. And the reason for that is that's not a very big premium driving factor. Most policies allow you to have up to $100,000, $300,000, or $500,000, and you're probably talking about a difference of $20 a year to go from $100 to $500.
Oh wow!
So I would typically recommend as much as you possibly can. That coverage is for things like we kind of mentioned earlier. Someone comes over, trips, falls, hurts themselves, a dog bites somebody, those type of things.
Is it the dog bites even outside the house?
That's correct. Yeah.
So
It doesn't even have to be a bite, right? A lot of people I recommend say, oh, my dog would never bite anybody. Well, understood, but what if you have a little child walking down the street and the dog just wants to play with them and jumps on them and knocks them down, right? That's still potentially a liability claim depending on who you're dealing with, right?
So you do want to know if there is a pet in the house.
That's right. So I will always ask about, what type of pets do you have? It's very important, even if you have a more aggressive breed of dog, like Rottweiler or Pit Bull or something, to mention that because that may influence what company that I put you with, because there are many companies that just won't cover those type of dog bites.
Okay.
So that's very important. And then your liability coverage includes coverage for court costs, attorney's fees, and any judgments placed against you up to that amount. So if you've ever been in that situation, sometimes $100,000 doesn't get very far. Mm-hmm. That's why I usually recommend, hey, let's just go to the top end that we can.
If it doesn't affect it.
For the extra $20. Right?
Let's look into that.
That's definitely worth it.
So I would assume that, yes, client can customize their liability coverage based on what they need.
Absolutely. There are many, like you said, if we just don't feel like that's going to be an issue, obviously you can drop it down. For those people with more assets and more things to protect, they should really look into personal umbrellas or excess liability policies as well.
Okay. And you do umbrella coverage?
Correct.
Okay. On the personal liabilities, is it all the pets or is it specific pets that they cover? Do they cover snakes?
That's a good question. So you need to if you have other types of pets, you need to let your insurance company know, or your insurance agent know. A lot of times, cats, probably not a big deal. Sometimes when you get with wild or exotic pets, perhaps dangerous snakes, people own tigers, those type of things, right? There are insurance companies that are generally not going to cover that kind of thing. So we need to talk about it.
That is crazy. I met this nail tech that he's a snake breeder. I'm like, don't even touch me. Don't even come close. You might have a snake in your pocket. I don't know.
Maybe not for me, but different strokes for everybody, right?
So coverage for high volume items, can you cover that as well? Like for jewelries and art collection? I know you covered a little bit about that.
Yeah, absolutely. So typically those things are done with an appraisal, and you can cover that. And when you schedule that item, you cover it for pretty much anything you can think of, including if you just lose it, right? Okay. So those type of policies are called personal article floaters or inland marine policies. They're different ones, but yes, we can do that.
Perfect. And you covered how you can determine, so we can go through the appraisal, specific appraisal for that item. Typically
that's best, right, is to take it to an expert, let's say jewelry, to a jeweler, or there are different appraisers in Dallas as well that do that, and they can write you up an appraisal of what they feel like it's worth for, different companies cost different, or a lot of times when you buy the item, a lot of times they will give you an insurance appraisal as well.
So, what if I don't have the appraisal? And I said, you know what, I paid this much for this item, and that's how much coverage I want.
Sometimes if it was recently purchased and you have, the invoice or something that has a good description of the item, mm-hmm. So just, narrowing it down to jewelry that has like the color, cut, clarity, and those type of things on there. Sometimes we can use that if that's been a recent purchase. But if it's a little bit older, maybe it was 10 years ago that you bought the item, probably need to get it reappraised.
Okay, so that comes up with the question of, would it be a recent value? So let's say I had it 10 years and I had it insured since 10 years ago. So obviously they appraised it and it was, do I need to appraise it every year?
I wouldn't say every year, but it's a good idea to keep it fairly recent, right? And that's because the prices of gold and diamonds and all those type of things change all the time.
Right.
And when you insure an item, and let's say you insure it for $10,000, right? That is the max the insurance company is going to give you for it, even if you lose it and all of a sudden it's worth $20,000. So it's a good idea to keep it.
So they don't do a
somewhat
market value.
That's right. Well, on the low end side, they will, right? So, for instance, you also don't want to have a jeweler who just is trying to make you feel like you got a great deal.